Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surabhi and Nigel. It's a rainy day, guys.
Yeah.
Actually, I'm glad it's raining because July
very
so far
dry.
was absolutely dry. I mean, it should rain. It is raining.
It was pouring.
Yeah, absolutely. And, set for the weekend, perhaps, with the beautiful weather, at least in this part of the country.
Yeah.
And set for some fireworks between Mr. Powell and Mr. Trump. The men were together viewing the new Fed building. So, yeah, lots to talk about.
That was most entertaining, right, overnight. But also a word on,
Look at that. Look at that.
And the commentary was in, the exchange was even better.
You know what I thought of that visual?
Pure cinema.
I mean, the first thing which hit me is that compared to Powell, Trump is really tall.
That's
The first thing which came to my mind, maybe Powell is too short. But anyway, we'll get to that in just a bit from now and talk about in terms of what happened. Let's take it from the top, right? What you need to know as we begin another sort of trading session. You basically have U.S. equities which continue to drift, but drift in the right direction, which is up. The S&P was up, Nasdaq was up. Russell, the small cap index in the US didn't do well. That was slightly lower. But otherwise, I mean, the benchmark large indices once again drift higher is what we've seen, like for the bulk of this week earlier. You had data points, lower initial jobless claims, which is good news. Strong US PMI. I mean, essentially supporting price action. So the macro data points were supportive. Macro markets, 10-year yield, 2 basis points higher, 4.4. I mean, basically, we've been between 4.35 and 4.5 for a while. Dollar index, 97.45. But of course, we've kind of fallen quite a bit and just a small push up. Oil prices around 69.5. Actually, none of these indicators have done anything spectacular, even anything, biggish for a while now. So they're all little up, little down, but not really going anywhere. Now, talking to those visuals, right? President Trump visited Fed Chair Powell, saying that while Powell should not be fired, he should lower rates. And we'll kind of talk more about this. And you saw those visuals, etc. There was a little bit of back and forth about renovation costs and all. But I'll tell you this, from a market perspective, I mean, this is kind of now slowly fading into the background over the last 2 weeks or so especially. People have kind of sort of come around to the idea that maybe this is essentially keep going to battering Powell, saying that, well, he's to blame for rates being high and rates should be lower, etc. But that is what it is. It's like a foil. I mean, you sort of blame the guy if things go wrong, but you keep him because he is essentially that. Fed may cut rates at some point, but the general view out there is not because of what President Trump is saying, but because perhaps down the line there will be some weakness in the economy, which will require a response from the Fed. So that is that. Now, trade tariff headlines continue to remain the big talking point as we go into the weekend. From yesterday evening, we'll sort of play out sound bites that India-UK FTA, Prime Minister Modi, Prime Minister Starmer addressing the press jointly about the FTA. But, I mean, as far as US is concerned, not very much at all. I mean, that's kind of faded into the background, so to speak. Yesterday was a poor session for the markets, right? I mean, actually, it was not just the broader indices which pulled back. The Nifty Bank did much better. Mid and small cap index was down about 1%. But you also had lots of single stock actions. I mean, around this time, we were talking about how IEX perhaps could be the big accident of the day. I think was down about 30% yesterday. But you had other names, I mean, Persistent and Coforge and many others. So it was a poor session overall. So I'll just put out levels for the index, right? Supports for the Nifty, 25,052. It, by the way, broke the recent two-day low. 25,052 is the first support. 25,018 is the next one. If the 25,018 level breaks, you basically are looking at a retest of 24,882, which is the low over the last fortnight or so. I mean, so it's all incremental. It's all very near term, but that is what it is. Those are the levels we're working with. So 24,882 ultimately is the low that the market made once the Nifty broke that 25,000 level a few sessions back. And we'll see if that comes back into view. Bank Nifty did not break any important support levels. It was a much better session as compared to the other indices. Here, support comes in at 56,692, which is the swing low. And after that, 56,617, which is a 61.8% retracement. And near-term resistance band for the Nifty Bank is 57,300 to about 57,350. Very, very near-term levels, but that's the market we're in. GIFT Nifty gives you a quick sense of how we're starting. It's down another 100 points. I mean, so not looking all that great. The screen's been telling you that the market's kind of tired and things are not responding. I mean, good numbers are not responding well on the upside. Bad numbers, of course, getting absolutely pummeled out there. Surabhi.
Absolutely, and we'll have more numbers to digest today. It's a pretty heavy earnings slate even today. But before I talk about earnings, let's actually go back to that big global story with the U.S. president, checking out all the renovation that's happening at the Federal Reserve building. A lot of back and forth on the cost of that renovation. But then he was also asked the critical question on whether he still plans on firing the Fed chair. Let's listen in to what the U.S. president said.
I have one dispute, and the dispute is there could be some things with money and, where it comes from, how it's come from, how it's printed, where it's printed, all of the standard things with the Fed. But I just want to see one thing happen. Very simple. Interest rates have to come down. If the interest rates don't come down, we're knocking it out of the park with high interest rates. If interest rates come down, then that final little element kicks in, that's housing. To do that is a big move, and I just don't think it's necessary. And I believe that he's going to do the right thing. I believe that the chairman is going to do the right thing. I mean, it may be a little too late, as the expression goes, but I believe he's going to do the right thing.
Okay, so markets perhaps taking their cue, at least, no plans of firing the Fed chair. So for what that is worth. Now let's come back to what we're seeing across Asia and some of the other cues. Markets across Asia are seeing profit taking. They've had a good week, especially the last 2 days have been a big surge for markets like Japan. So it's basically profit taking. The Japanese market itself is down half a percent. The others down between 0.5% to 1%. You can see the Hang Seng and Taiwan index on your screens over there. The dollar has been fairly steady, not too much move in the currency markets. Yesterday, the ECB met and they finally left rates unchanged. They've been on an easing spree for a while. But yesterday, they left benchmark rate unchanged at 2%. Now, for us, it's been consolidation, but the bias is negative. And it's very, very clear that the Nifty is unable to sustain above the 25,200 mark. We went there on Thursday and, on Wednesday. And Thursday was an entire sell down from that level. In fact, that talk, brings me to what we've done so far this week. So the Nifty is up just about 0.5%, despite all of this back and forth. We're still up 0.5%. Mid-cap index is down 0.2%. The small cap index, so the broader markets, slightly smaller stocks, that's where the pain has been more apparent, down 1.5%. The sector churn is very interesting. So we know IT has been slammed down for obvious reasons this week. FMCG is underperformed as well. It's down 2.5%. IT index down 2.7%. The money is shifting to the banking trade. BFSI is the only so-called island of safe haven, at least going by the trends that we've seen this week. However, speaking of BFSI, it's going to be all about Bajaj Finance today. And while the growth numbers are fine, and we saw that in the update as well, the issue is going to be on asset quality and that slight increase in credit costs. Bajaj Finance is in fact saying that the stress in the two-wheeler space, three-wheeler space, and the MSME space, it's persisting. Now, the market is in no mood for negative commentary. How will it take it? Will it take it with a pinch of salt and move on Bajaj Finance? Or could there be a bit of selling over here? We'll find out. But financials definitely on my radar today. Nigel.
Well, yesterday's trading session was a weak one, but it was a weekly expiry that played out as well, and that could have played a bit of a role out there. On the whole, it appeared like there was lightening of positions because in the cash market, you didn't have any big, sell number coming in from the net institutions. But the weekly expiry factor did play out, and both on the Nifty and the Nifty Bank, there was some lightening of positions out there. Even if you look at the FIs, both on the index futures as well as on stock futures, they were lightening positions in yesterday's trading session. So that's how the data points did play out in trade yesterday. Moving to how they are set up, the FIs, they continue to remain net short with around 1.45 lakh contracts on the short side. While you have clients, now their long positions have hit around a lakh. Remember, at the start of the series, it was a third of what it is as of now. And even if you look at the FI short positions, it was a fifth of what it was as of now. So clearly, both of them are moving in opposite directions. And next week, we have the monthly expiry that will play out. But called writing came back into play. And because of the aggressive called writing, we have seen that the PCR has come down to around 0.84 yet again. in yesterday's trading session went to around 1.1. And the 25,100 call, 25,200 call, both of them were very, very aggressive in yesterday's trading session. Between them, it added close to around 80 lakh shares. So the call writers, they're getting very, very confident. Sometimes, they can get stumped on the wrong side. But in terms of levels that we're looking at, well, on the downside, the recent low, which comes in that vicinity of around 24,850, well, that's going to be the important mark. The low is at around 24,882. So you'll want this level to get defended, 24,850 ballpark. On the upside, resistance comes in going by the options data at around 25,250. For an adventurous trader, if you get a 100-point gap down and if you get another 100, another 50 points down during the course of the day, you get closer to around this mark. So for an adventurous trader, they may look at just buying it just for an intraday minor pullback that we could see. So keep an eye out on this mark. You don't want this mark to get breached on the downside. The Nifty Bank, that's been holding one end up, as you all mentioned. And, yesterday it ended pat at around the 20 DMA. The 50 DMA becomes a bit of a resistance zone. So this is the mark you don't want the Nifty Bank to break. And in terms of stocks that we're looking at, well, we mentioned yesterday, there was a likelihood that Bandhan Bank could come out of the F&O ban. And that was the case. The stock ended high yesterday. Today as well, it's eligible for trade. So we'll keep an eye out on that name.
All right. Nigel, thanks very much for that. Lynn.